right here in Lagos, Nigeria. Good morning, good evening, wherever in the world you're watching from. It's Business Morning live from Channels HQ. I'm Ladi Williams. First off, let's take a look at what's happening with the markets now. We'll see oil prices still on the rise. Did rise today, boosted by expectations of U.S. crude inventory declines, as well as the latest output cut targets set by OPEC Plus Producer Alliance. Brent crude was trading at 45 cents up, $85.39 a barrel. U.S. WTI crude, that was up about 40 cents, about 0.5% to $81.11 a barrel. Analysts say energy traders are still digesting the OPEC Plus surprise production cut, and any news that suggests the oil market will remain even tighter is going to send prices even higher. The OPEC Plus plan would bring the total volume of cuts by the group to 3.66 million barrels per day, including a 2 million barrel per day cut last October, equal to about 3.7% of global demand. To the global grains market now, see Chicago wheat futures dipped in Asia trade, extending losses from the previous session as an improving weather outlook offset support from poor U.S. winter crop conditions, while soybeans regained some lost ground. The most active wheat contract on the Chicago Board of Trade, WV1, was down by 0.7% at $6.86 for 3/4 of a bushel. And to some economic news now, foreign direct investment into Nigeria has plunged by 1/3% last year as a severe dollar shortage deterred companies from expanding. Latest data from the National Bureau of Statistics showed an investment fell about $468 million in 2022 from $698 million a year earlier, falling further from a high of $4.7 billion recorded in 2008. Meanwhile, total capital importation into the country in the fourth quarter of 2022 dropped by 51.5% to about $1 billion, lower than the $2.1 billion seen in 2021. Some industry players believe the country's perpetual lack of structural reforms means deep-pocket foreign investors are pressing pause on Nigeria's huge potential and abundant national resources. And the president of the Association of Bureau de Change Operators of Nigeria, Mr. Aminu Gwadabe, says his association is looking forward to a legislation from the incoming administration that will highlight and enhance the contribution of the sector to the economy. Mr. Gwadabe spoke with journalists on the sidelines of an event organized by the Intergovernmental Action Group Against Money Laundering in West Africa. According to him, the legal backing is long overdue, and the nation will benefit immensely from its outcome. Take a listen.
At the end of the day, we work a win-win communique that the regulators and even the presidency will be willing to accept. And then we see we are advocating for a bill, industry bill, whereby the bill will ensure that the BDC have access through securitization of the diaspora remittances. It's huge. Statistics put it nothing less than, even during COVID, Nigeria received nothing less than $20 billion, received of diaspora remittances. Other countries, they are scrutinizing that. We are encouraging the incoming government to look into this advice, scrutinize it. What do you mean by scrutinizing it? Collect even overdraft of $5-6 billion. We are so sure it will come back because Nigerians abroad, we have about 15 million Nigerians. We've seen some statistics here that are abroad, and each one of them is only sending only 5% of his savings. Of his earning. Imagine the guys in America, the kind of sector they are, medicine and engineering, so they are earning a lot. Let us encourage them and also be transparent and be competitive. There is no patriotism in capitalism. You can't say that I should bring my dollar at 750 when another market is giving me, should bring my dollar to at 460 when another market is giving me 750. So how do we operate?
And to our first conversation now, the reports the cash crunch is beginning to ease as banks disburse cash. Some have identified winners and losers in the whole narrow design policy. But let's see where the POS operators are in the scheme of things. POS charges coming back down. Join us now is Mr. Victor Olojo, National President, Association of Mobile Money Bank and Agents in Nigeria. Great to have you on that side in Abuja. Good morning.
Yeah. Good morning. Thank you for having me. It's a pleasure to be here this morning.
Yeah, so some have said the narrow design policy and the consequent, cash crunch effectively ended business for POS operators. But we do know, some operators were charging a hefty sum, to get cash. But how is it looking now?
Yes, in addressing this, let me just quickly say that it's been a very unfortunate trend of incidents in the past 2-3 months in Nigeria. Just before the election, agents were actually forced to live with the conditions, created by the policies of the CBN. We tried our best to continue to serve Nigerians in very difficult circumstances. We're happy that the Supreme Court intervened and things are a lot better now. Gradually, cash is beginning to come into circulation, and these charges are beginning to come back to normal. So again, let me use this opportunity to apologize to Nigerians who really felt bad about the issues regarding them accessing cash through POS agents. As a matter of fact, it is the reality that we find ourselves in Nigeria. And every agent out there was going out of their way to just help Nigerians, find a way through the old cash crunch and all of that.
But are the agents, the POS agents, are they getting cash better at this time? Or how good is it?
Well, at this time, we are still faced with a lot of challenges. We are still finding it difficult to access cash. If you go through the banks in Lagos and Abuja, you still find a lot of crowd in front of banks and there's still limits to what you can get. As a matter of fact, agents are supposed to have some kind of distinct or special recognitions when you get into the bank. We are yet to see all of those. But what is actually helping matter is that the cash is now coming to circulation, and we're able to get cash in alternative areas outside bank, so marketplaces, gas stations, and all of that. So that way we're also able to help mob cash and recirculate to Nigerians who need these funds.
Let's look at the POS business now. Do people still find it, lucrative at this point? Or how do you think the cash crunch issue, will shape the industry going forward?
Like many other sectors in the country, ours was badly hit. POS, over 80% of POS businesses were practically out of business. Many, in thousands, hundreds of thousands, are still yet to find their feet back to business. It's been terribly difficult. Before now, just before this whole issue, the statistics out there, we had over 1.5 million POS agents. And with the old issue policy and all of that of the CBN, virtually 90–80% of agents were out of business. Those who were still in business were those who probably still had some kind of access to cash from filling stations and all of that. Just recently, the CBN has also released an exposure draft for agency banking in Nigeria, and we've highlighted some issues around. It's still an exposure draft, and we hope that they'll be able to look into this to help revitalize the sector and help many jobless Nigerians get back to job.
Talking about the exposure, draft now, you did mention, some concerns with some of the content there. Can you itemize them for me?
Yeah, so there are very fundamental clauses there. That is moving us from a very familiar to unfamiliar terrain. I mean, one major one, before now, it's been a doctrine of exclusivity, by the CBN. Well, I must commend the CBN also for coming out with this. It's a good one because the market to the POS industry has been largely unregulated. So we're happy to see this, an association of mobile money and bank agents being the prominent association for POS operations in Nigeria. We have actually raised the concern. One major one is that we're moving from non-exclusivity to exclusivity. What that means is very simple in clear terms, is that before now, an agent was free to work with as many operators, super agents, PSBs, as you wish, And now the new exposure draft is actually stating that an agent can only work with one operator per time, be it bank, super agent, PSB or anything. And we felt that that comes with its own shortcomings, because not all of these operators actually carry out all of the same functions, and if indeed we are driving financial inclusion, I think we need to look into that. That's one. Two, it is that it would in some way affect the operators themselves, because naturally, if agents are to choose the operators, because it's a free market, if agents are to choose the operator they want to work with, they will naturally tilt towards the one that suits them best, and other guys who are trying to struggle or get their hold in the market would, right now what happens is that A, B, and C can come market to me, and I can work with A, B, and C, but for reasons of monitoring, supervision, and we've consistently told the CBN that Armband can do this thing. We already self-regulate ourselves. All we need to do is just work closely with the CBN to ensure that issues of high prices by agents, monitoring, supervision, we're on ground. We send quarterly reports to the CBN and get things done. We're working with virtually all the CBN branches across the country. We have fiscal meetings. We meet with the bankers committee. So all we are clamoring for is just better synergy to serve Nigerians. And I tell you, it's going to be a smooth ride all the way if this is implemented.
Yeah, I'm talking about, self-regulation and, POS tariffs, going up and down at this time. Where do you see, POS tariffs in the second quarter, if this cash crunch continues?
Wow, I want to remain optimistic. I want to believe that this trend will continue. There will be continuity in terms of release of cash to Nigerians, to the Nigerian public. But if it remains that the CBN actually would still stifle the release of funds, then there will be some kind of concern about the prices. And part of what is also in the framework is to see how there can be a fixed price. And part of what we are saying as an association is that there needs to be a roundtable discussion around that, because there's also an element called cost to serve. The cost to serve in Damaturu is different from Lagos and Abuja. So what we're advocating is to have a price cap for both minimum, don't charge below this, don't charge above this, for different price range and tickets. And that way, the good about this also is that more Nigerians have actually embraced technology. Many of the microfinance and digital microfinance, the fintechs, have been able to get a whole lot of direct customers who have downloaded these apps and are embracing. And I'm happy that the CBN has also made clarification as to the categories of what these operators are and all of that, just for clarification. And Nigerians can know that their funds are safe with these operators.
And talking about the fintechs now, how helpful has that industry been for your operators?
Oh, mine. It's been amazing. Many Nigerians have come to tag many of these fintechs as life-saving, lifesavers, during the issue of the cash crunch 3-4 weeks ago, many banks had issues accessing your mobile app and all of that. But kudos to the great fintech, the guys, and thanks to the CBN for creating an enabling environment. Many of those fintechs were able to come in play. We have high demand by merchants today for POS terminals. The demand is amazing. many supermarkets. As a matter of fact, if you're operating a supermarket, grocery store, I mean, you need POS. And you'd realize that it's now a thing of strength. Many of those guys are now focused on using the POS provided by the fintechs compared to POS provided by the banks. You can go and research. And what this just clearly shows is that it's better or best to play in your area of strength. The fintechs have gotten it right. The MMOs, the likes of the core guys playing in industry. I wouldn't want to mention any name, but we know them. I mean, many of these major supermarkets are beginning to embrace, and just for one reason. I mean, it's very easy, very flexible. You're able to confirm your transactions immediately. As a matter of fact, a number of them have also introduced technology that enables you either accept or reject transfers coming into their terminals or into their account. So all of these are things that Nigerians appreciate. It makes the ease of doing business amazing for people who are ready to do business.
And I'm pretty sure, you know, some of these fintech platforms also felt the pressure, because I saw, you know, some of them, their platforms actually went down, you know, this period too. They couldn't handle, you know, some of that, all those transactions coming in, you know, for the fintech platforms. But they did, you know, serve their purpose. Well, thank you so much, Mr. Victor Lojo, President, Association of Mobile Money and Bank Agents in Nigeria. Thank you so much.
Thank you for having me. Thank you.
All right, so we're talking how the POS tariffs are looking at this time, and he's optimistic that they're going to come down, you know, at some point in the second quarter. But now to another conversation as we go deeper into the second quarter of 2023, looking at the Purchasing Managers Index in the first quarter. Reports show PMI started in 53.5 points in January. Fast forward to March, it stands at about 42.3 points, with a downturn deepening in March. We also got that, you know, big debt stock data for 2022, standing at 46 trillion. A lot of this having a big impact on the Nigerian economy. Let's talk to Dr. Yemi Khaled, our Chief Economist, KPMG Nigeria, joining us via Zoom. Great to have you on the show. Good morning.
Good morning. Thank you for having me.
So yes, looking at that debt stock we got for 46 trillion naira for 2022, you know, a lot of people and experts say, you know, debt is, you know, not a bad thing in itself. It's more about how you can handle, you know, repayment. You know, for you, 46 trillion, is that too much?
Well, I don't think a debt stock of 46 trillion, or actually, if you want to, probably more over 70 trillion, if we add the ways and means loans from CBN, when compared to comparable countries, when compared to the huge development expenditure requirements needed in Nigeria, and also when we compare it to our country's capacity to borrow in a 200 trillion naira economy, we might not consider it too much, but that's about roughly 35%. However, like you said, when we analyze it from the perspective of our poor ability to generate enough revenues from that 200 trillion naira economy, which is about, it ranges between 6 to 8%. And if we also consider our debt service payment ratios, where federal government debt service has ranged from about 50 to 80% of federal government revenue. Also considering the level of our growth, which is slow, which is fragile at about 3%. In fact, it's about 1% in the last since the COVID pandemic. It means your economy is growing slower than your debt accretion. So in that case, given all these considerations, it suggests that the debt stock might be too high and unsustainable, that is, given our current realities. And by the way, there's no standard definition for too much debt, but I believe the rules that apply to you and I as individuals, as businesses, with respect to debt can be applied here. So many analysts will say any debt to income ratio above 50%. In fact, most people say 35%, but I would say any debt to income ratio above 50% is considered excessive. But there's no standard definition, but I would say anything above 50% is worrying.
And definitely looking at the debt to revenue ratio at about 80%, looking at where we are, you know, right now, there's that debate about Nigeria not having a revenue problem. Some say it's more of a spending problem. What do you think?
I think it's we have a debt problem. I think we have definitely have a revenue generation problem, and we have a growth problem. Revenue generation, because we have a 200 trillion naira economy and we're getting only 6-8% in terms of revenue. That's significantly lower than the 15% minimum recommended. Then you have a growth problem, because even if your 6 to 8% was the best you could do in terms of revenue to GDP, if your GDP was, for example, is 200 trillion, it was 400 trillion, then the absolute amount of revenue you are getting, even at the 6%, will still be good enough. But imagine if your GDP was 400 trillion, not 200, then you have doubled your revenues, even at the 6 to 8%. So we're not growing enough. 3% is growing slower than our debt accretion. For a country that has huge expenditure requirements, that's not enough. And we also have an expenditure problem. That's been more efficient in the way we spend our resources. Do we need as many ministries, department, agencies as we have? Do we want to have that conversation about the best way to spend money? For example, fuel subsidy. Do we need every year for all the agencies to be having huge capital allocations, and not necessarily for things that are targeted towards growth and development, for computers and cars and things like that? So we have all those three problems, in my opinion: a revenue problem, a debt management problem, as well as a GDP growth challenge.
What do you think the incoming government should do at this point? There's a possibility of inheriting about 77 trillion debt if you add Ways and Means, and we still have that issue of securitizing Ways and Means. If it actually is securitized, how is this going to impact the economy, and what happens next?
Well, it might not even be just 77 trillion, because there's additional debt in the state and federal government budgets for 2023. And then you also have to factor in the possibility that incoming administration at the federal and state levels might want to do supplementary budget. So the total debt budget in 2023 might even be higher than what it currently is. 7 trillion, like you said, we take our debt payment to revenue ratio to about 80%. And this is, that's assuming, sorry, it could be about 80% on the assumption that we hit our revenue targets in 2023, which is also challenging, considering that even lower revenue targets in the past have not been met fully, and considering also that already in the first quarter there are suggestions that the economy has slowed down. So the ability to meet that revenue target in 2023 is going to be difficult. But so you can imagine an 80% debt payment to revenue ratio, assuming we even meet the full revenue targets in 2020. So it's really going to be challenging. With respect to what can be done, I think there are many different models to generate more revenue, models to manage debt more effectively, whether it is expanding the tax net, pulling more of the informal sector, whose economic activity contributes about 3% to revenue, but accounts for about between 30 to 40% in this 200 trillion naira economy. We can also consider better debt strategies. For example, borrowing against government financial assets rather than against the volatile crude oil sales that we currently do. There's the possibility of to boost revenue by licensing greenfield investments in various critical sectors, or various equity investments in government-owned assets through their listing and so on. So there are definitely lots of options that we're not fully exploring currently that I think can be looked at. But as far as the Ways and Means is concerned, it's most likely going to be securitized. I think that's the best way to handle it. And the impact on the economy and how investors will react to it, I guess, ultimately depends on how it is structured. Nigeria might have to offer increasingly attractive terms to attract investors, especially given the current constraints investment confidence. You are aware that Moody's downgraded the country recently. So we might have to offer more attractive terms to attract investors. We also have an issue. But whatever the case is, it's going to be better than currently borrowing from the CBN at MPR plus 3%. Whatever happens with securitization will definitely be better than the current interest rates we're paying at the CBN.
All right, before I let you go now, what are you seeing for GDP growth in 2023 for Nigeria?
Well, considering what has gone on in Q1 already, you mentioned PMI levels going as low as 42.3 in March. That suggests the economy has slowed down in Q1. In fact, 42.3 is less than the lowest levels we hit even during COVID. So that's suggesting that Q1 actually took a hit. So once your most forecast for GDP growth, including ours, was at 3%, but this was before the challenges that the economy faced in Q1. So I think there's going to be most analysts are going to revise their 2023 growth forecast. From ours, it's at 3%, but I expect it's probably going to be closer to 2.7, 2.5, 2.7 now, given the challenges that we've seen in Q1, and seeing that the PMI results are already suggesting that there was a slowdown, maybe even a slight contraction of the economy in the first quarter.
All right, I guess we'll have to leave it there now, Dr. Yemi Khaled, Chief Economist and Partner, KPMG Nigeria. It was great having your perspective today. Thank you.
Thank you for having me.
All right, so we'll take a break now. After the break, Commodities, AFEX Commodities Market Update is next. Do stay with us. This is Business Morning. And for the AFEX Commodities Market Update, now let's get a summary of performance at the exchange for the week ended. There was a mixed performance across key indicators. So turnover increased by 2.05% from 2.03 billion naira to 4.17 billion naira. We also saw an increase of 2.21% in the volume of contracts traded. There was a decrease in the number of deals traded by 27.93%, closing at 129, and a decrease of 1.367% in the AFEX Commodity Index, closing the week at 471.99 index points. The AFEX Export Index saw a positive trend from 224.04 points to 225.48 points. For the volume of contracts traded, saw an increased volume across maize, soybean, ginger, and cashew. For price movement now across the export commodities, there was positive trend with sesame topping the chart by 10.58% to close at 1,150 naira. Cashew nut, that increased by 6.02% and closing at 649 naira 88 kobo per kilogram. Ginger, that's rose by 3.66% and closed at 923 naira 93 kobo per kilogram. Paddy rice, that grew by 0.6%, closed at 316 naira 2 kobo per kilogram, while cocoa remained the same. Across grain commodities, we saw maize that declined by 7.95% to close at 229 naira 19 kobo per kilogram. And now, taking the conversation forward, the role of data cannot be overemphasized as gaps in information prevent efficient tackling of food insecurity. As millions are invested in agriculture without accurate and reliable information, this leads to losses in productivity and income. Let's take a look at the role of data in farming now. Joining me is Kamaldeen Sumaila, Head Business Intelligence at AFEX. Great to have you on the show.
Thank you, Ladi. Good morning.
Good morning. So innovation and technology within the agricultural sector, have provided reliable agricultural data systems. What direct role would you say data plays in creating a more inclusive food system?
So what data does, in essence, is reveal the intricacies of the subject matter being observed. What that does is the peculiarities can be taken by policymakers and other institutions to create solutions that are basically targeted to different segments in the economy or in different areas of the country. And this prevents them from taking blanket approaches to solving problems and leaving some people unattended or unimpacted. A more relatable example of the role of data can be seen in traceability and sustainability as a whole. Here, data creates a sort of trust economy because your final consumers want to understand the quality of what they are consuming, its origins, the conditions under which it was produced, the farmer who produced it, what's his financial status. All of this comes together to create a transparent area where what you have is people basically conforming, all the players in the value chain conforming to these set standards and making sure that they adopt best practices to improve quality of whatever products are getting to your table. And at the end of the day, food security is ensured.
And talking about, promoting inclusivity in the food system, what other challenges still need to be overcome in that area?
So a major challenge is around data silos. So think of an organization like AFEX trying to see which farmers have the most potential to grow or to do more. You are trying to combat that or to solve for that. You are trying to get data around their creditworthiness, and to estimate someone's creditworthiness or create a credit score for them, you typically need to observe their financial data. And financial information is usually spread across different organizations, different entities. So getting access to that is one key problem.
And smallholder farmers are at the heart of, agriculture in the continent. Are these innovations tailored, to their specific needs?
Certainly. Most of the work we do is with the smallholder farmer in mind. So I was going to talk on precision agriculture as an innovation, but not even getting to something that complex. Something much more simple is giving farmers solutions that make them more able to manage their crop management strategies, from irrigation to inputs application, and even the entire growing cycle. So think about giving them weather forecasts that allows them plan their entire growing cycle, forecasts that are long enough, and then market pricing, market information that lets them know, should I store today or should I sell my commodities and get the best out of the market.
And I'm sure everyone has a part to play in all of this for the stakeholders. But what can individuals and organizations do to support development of a more inclusive, food system? And how can data be used to inform, and guide these efforts?
Certainly, everyone has a very important role to play. And leveraging on my first response around policy making. So there can be government policies that sort of increase food production and create a market that drives internal consumption. And this can be tailored to specific segments, like I mentioned, when you are able to observe the peculiarities of those areas. Secondly, for organizations like AFEX, it's very good to what we are trying to do is improve our climate smart services to farmers that is able to give them longer forecasts so that they're able to plan their growing. And lastly, I think I would say research institutions. They can benefit from using data by observing weather patterns, trends, and soil nutrients, observe the soil nutrients in every area to create sort of crop resistant or disease resistant policies and procedures that helps farmers to grow better and improve their yield at the end of the day.
And definitely, it's been a challenging first quarter, and I'm sure that agriculture industry has have their challenges at this point. But what are you seeing for the second quarter? Talking about profitability and yields.
Certainly. So what you have currently is basically there are many factors to consider, and that's where data comes in, right? If you're able to study and make projections of how much yield, compare last year to this year, compare the market intricacies that are happening today, and see what are prices looking like, what are external factors to consider. So all of these come together to make all the stakeholders come to whatever decision that is necessary.
All right, thank you so much, Kamaldeen Smaila, Head Business Intelligence at AFEX. Thank you.
Thank you, Ladi.
All right, we'll take a moment now.
Going to the studio.
All right, and now for an opening call to the market, we have Ini John McQuarrie join us for the details. Great to have you, Ini.
Thank you so much.
Another day, and the first trading week of April.
We haven't seen a green. We haven't seen
one green. No appearance, by the bull.
Well, don't lose faith. Today is what? Today is Wednesday. We still have Thursday. We don't have Friday.
Yeah, just Thursday.
Yeah. But
one chance to make an appearance.
Yeah, we have today, don't forget. So
today is still included, yeah.
Today and then
I don't know
tomorrow.
why I feel it's already negative, but maybe it's just because of the
Ladi, please. The market went from unchanged at intraday. I was hoping at least the pendulum will swing towards the bull, even if it's 0.01%. At least we'll take it.
Marginal.
You know what I'm saying? But
unfortunately,
we had to do it the other way. But these are the realities of our time. So let's face it.
Exactly. Profit taking.
Man up to it.
Profit taking.
All right, so let's look at the market numbers now. It closed the second trading day this week in the negative again, 0.27%. And the 54,000 is now looking shaky because it closed at 54,035.39 points for the all share, while the market cap is still at 29.43%. A lot of profit taking, as Ladi mentioned, there is what we saw. But before we get to that, the activity looked green, even though not very positive. More of profit taking, especially on major banking stocks like Zenith Bank, the big guys, the Fugas, GT Co. Both of them led to a 0.3% decline in the benchmark. Let's look at the sectors now. I'm sure that will capture it. There you go. When the big guys fall, the market goes red, and the bear just keeps staying happy. So the banking counter was down 1.34%. No thanks to profit taking on GT Co and Zenith Bank. And then consumer goods looked good yesterday, 0.12%. While marginally down, industrial goods, insurance, almost 1%. It's just, the weight of those insurance stocks, they don't really move the market that much. Oil and gas finally recovered when the world oil stocks have already done very well. We saw them recovering yesterday. Let's see the top trades for the day. That's for Tuesday. Fidelity, Transcorp, they have remained consistent for a bit now. And then we see O&O joining that group. We do have Afolabi Benro joining us now to help us understand some of those movements that we've been seeing in the market. Afolabi, good morning. Thank you so much for your time this morning.
Good morning, Ini. Thank you so much for having me.
So, first of all, when we had the surprise cut by some OPEC members, and then we saw the price of oil surging globally, we did see the oil stocks doing very well, at least on Monday, part of Tuesday, but it didn't reflect in Nigeria. I can't help but ask myself, are we outside the world?
No, we are not. If you remember a couple of weeks ago when there was crisis in the financial sector, the global banks were having issues. We also felt the effect of that on the performance of the markets in Nigeria. So no, we're not immune to what's happening globally. I think we also have some other factors that affect our own market individually, which sometimes limits the effect of the global performance of these stocks. So you have to look at things like liquidity, the availability of bids and offers in the market. So you have to look at the full picture when you're looking at Nigeria when making that kind of a comparison.
Okay. Now, we also know corporate action, they're supposed to have some kind of effect on the market, even though we see a lot of profit taking now. Is it still reaction to those corporate action, or has the effect weared out by now?
So I think in some names we're seeing the effects wearing out. Zenith Bank, for example, had a very nice run. But as you had mentioned earlier on, we're starting to see some profit taking come into the market. I mean, typically during this period of the year, investors usually look out for these corporate actions as a catalyst for the market. So we've been seeing some investors taking positions, even from as early as December last year, just to take advantage of some of these corporate actions. I think it's also important to highlight that there have been some delays in some of the announcements. Ideally, we should have had all the announcements by the end of March, but there are a few names that have sent notifications to the NGX with regards to some delays in those announcements. So we expect that as more of those announcements come out, we'll probably start to see further reactions to those numbers.
All right, so do we say that the market at this time is bearish? Can we conclude, because we've been seeing some negative drop in the all-share index, or is it just a temporal profit-taking action by investors?
I think it's a bit of both, if I'm being very honest. I mean, we've been seeing bearish sentiments, at least generally over the past, maybe over the past week or so. But with the way the market has been historically, when prices start to get to certain levels, they become too good to ignore. You start to see some investors coming back in to sort of cherry pick and take advantage of those low levels. And so the cycle continues. But generally, I think in direct response to your question, I think it's just a little bit of both. This is a quiet period for the market. A lot of investors are still anticipating stuff to happen in the future, and we'll wait and see how things play out.
What's the future this future that you see? What are some of those expectations? What are some of the market movers that we could see, and what's the definition of the future? Is it a week? Is it 2 months? Is it 3 months?
Okay, thanks for that question. So I think the first thing to mention is that we're in the dividend season. So some dividends have been announced. Payment dates will be coming up shortly, and usually when those payments are made to investors, some investors plow those dividends back into the market. So I think that's one of the sort of short to near term catalysts that we're looking for, that dividends will start getting reinvested back into the market.
All right, Afolabi Benro, trader with Stanbic IBTC Stockbrokers, thank you so much for your time this morning, and I wish you a profitable trading day.
Thank you, Yemi. Have a great day.
You too. All right, just before we head back to Ladi, let's see what the money market looked like yesterday. We had 20 deals at the federal government bonds worth 19.52 billion. And we do see a kind of competition between the January 2026 and February 2028. I guess investors are trying to see which one would do them better than the other. Let's go to the Treasury bonds now. It was 11 deals, 11.45 billion. And the March 2024 security was the most favored from the perspective of investors. Let's look at the central bank now. Central bank bills was just 2. Yeah, an improvement from yesterday. Yesterday we had only 1, but 2 yesterday. I mean, on Monday we had just 1. So this is for Tuesday. 2 deals worth 55 billion naira. I don't think we've done the NASD markets this week. So let's look at the unlisted market just before Ladi will kick me out of here. There was a total market cap was more than 1 trillion naira. It's good to note that, I mean, the unlisted market has retained that 1 trillion naira that is supposed to, it's been its benchmark for a while. Even though lost, we got to 700,000. But we had this 1 trillion naira for a while, even though yesterday we're down 0.78%. Let's see the next one there. The volume in 13 deals, we had a value of 20.55 million. Do we have those stocks that were traded yesterday at the NASD? It'd be nice if we have that, but looks like we don't have that. Okay, so Ladi.
Yeah. So, fingers crossed for today.
Yeah,
NGX.
you know, Ladi, there was one story yesterday about the Naira. hit another low.
A new low.
Yeah, but I mean, fortunately, at the close of trade yesterday, it's stabilized. Not that it's gained, but it went it closed flat at 463 naira 30 kobo for $1. So we'll see. That's at the INE window.
Exactly. So stability is good, and we know how volatile these currency markets.
Stability is good, but gaining is better.
Gaining, obviously, obviously, strengthening. Let's hope the naira strengthens even more. Thank you so much, Azini, there giving us the details from those markets. Now let's head on to London. We have Juliana standing by right there. Great to have you, Juliana. Good morning. So got some data out of the UK. Say almost 80% of employers in the UK pay men more than women. I guess no surprises there.
Good morning, Laddie. No surprises, unfortunately. And this is what we're seeing again and again every single year about this time every year, because it is a legal requirement for any firm operating in the UK with more than 250 employees to post just how much they're paying them. And that's exactly what's been happening. We've had a slew of big firms, charities, banks, public sector institutions providing this information. And quite sadly, we are not seeing improvements. In fact, I think the figure of about men receiving a 10% pay increase above women is similar to what it was like in 2017 when these publishings first became legal. I suppose for most women that are looking at the data, no surprises as well to see that black women fall foul. In fact, black women are typically paid 54% less than what their white male counterpart would be paid, on top of policing their body language, their mood and their tone, which has become a phenomenon for black women working in leadership roles. But this is pretty serious, and it does go to show just how far UK firms have to go. And I think a lot of charities that are looking at this information are saying, well, one of the reasons why there's a big problem is you're not seeing enough women in leadership roles and around the boardroom, particularly if you are a woman of colour. There are some serial offenders, one of them being HSBC, which is Europe's largest bank. They are one of the most unequal banks in Britain in terms of gender pay. So unfortunately, if you're working in that company today, you should be looking at your salary. They reported a wider mean average gap, disclosing that women were paid 45.2% less than men. There is a much longer list. Goldman Sachs, Morgan Stanley, they also are not doing too well. But I think bearing in mind that it is actually illegal to pay somebody of equal standing less than somebody else based on their colour or based on their gender. But of course, companies are finding loopholes to get themselves out of this. So this data basically looks at people who are at a middle stage in their career, and they've looked at the median average. But yes, no surprises that women are faring worse than men when it comes to salaries.
Quite interesting. We don't want any discrimination of any kind at this point. Let's get it all equal. All right, so there's also a new survey there in the UK. I see businesses expecting sales to rise over the coming year, but this is, despite seeing no growth over the past 3 months.
Yeah, there's interesting data that's been released this morning by the British Business Chamber. They have released their quarterly economic survey, which they do every 3 months, of course. And they conduct this by speaking to over 5,000 businesses, the majority of them small to medium-sized enterprises, which, as we know, is really kind of the heartbeat of any decent economy. And they say, according to those that they've spoken to, over 54% of them are pretty optimistic about their outlook for the coming year, which is good news. This is exactly what the Chancellor Jeremy Hunt and the Prime Minister Rishi Sunak would like to hear. Of course, the kind of economic gloom rhetoric that we received late last year has waded substantially, actually. We were supposed to be in a deepening recession. Even though the data suggests that we could indeed be going there, we are not there yet. And I think the fact that this is being reflected by businesses prices is good. The only thing is, this is a forecast. This is not the reality of what's happening. And if we look at the reality of what's happening, you know, businesses are still not getting the sales. I think the first quarter of the year, January, February, March, are always particularly difficult, especially for the services sector, which we know contributes 80% of GDP to the British economy. And, you know, with strikes, industrial action, people not going to work, parents having to stay at home, this does have a knock-on effect. Just one day away from the office means there is no coffees, means there are no drinks after work, means there's nobody going out for lunch. So we'll just have to see how it is moving forward. But yeah, some positive news in a period of pretty gloomy data.
Exactly. Positive expectations there. Thank you so much, Julian. I'll see you at 1:30.
See you then.
All right, now let's look at other markets. Now we see Bitcoin there trying to actually breaking some serious resistance in the market, and we look at the sentiment right now. We see sentiment is still quite greedy, you know, right now, talking about the crypto market. We see Bitcoin holding on that 28,000 level, and we see it greed there, talking about sentiment, just as we had yesterday. So traders are still bullish in this market. Let's look at the price of major cryptocurrency. We see Bitcoin there breaking that 28,000 resistance, up 2.39%. And we see Ethereum there approaching that psychological target of $2,000 per coin. That's trading at 1,900, big jump, up 5.73%. We see Cardano, BNB all in the green, 1.52% we're seeing for Binance coin there. Let's bring in Rume Ofi now, financial market analyst. Hello, Rume. Good morning.
Good morning, Larry. Good morning.
Great to have you, Rume. I thought I didn't have you there, but big news today. We see a peer-to-peer Bitcoin marketplace, that's Paxful. They've announced they're shutting down, directing users to retrieve their funds from its platform. How are users reacting to this, and what impact will this have on that P2P industry? Hello, Rume. All right. Seems I cannot hear Rume at this time. All right, we'll try and get Rume back. So talking about the Cardano, 39 cents, up 1.09%. So it's still positive gains we're seeing in the market right now. Let's flip over to the gainers counter. We see ICX topping the counter, 43 cents, up 16.56%. So we're seeing double-digit gains this morning in the crypto space. Little Dow, $2.75, up 15.72%. And we see RPL, $48.60, up 12% this morning. FXS, $9.83, 11.02%. So we're seeing, double-digit gains. We're seeing investors getting quite bullish, buying most of these altcoins at this time. Even though we're seeing Bitcoin dominance, I'm still inching up, showing that Bitcoin could go on a run anytime soon. But we're seeing Ethereum, the king of the altcoins, also holding its own this time. Top 5 losers for the day. Now we see Leo, $3.38, 1.31% down. Lean losses we're seeing this morning. INJ, $5.48, 1.17% down. And we see Chile's token, CHZ, trading at 12 cents. That's down 0.74%. XDC, and we have Pancake Swap, the token there for the decentralized exchange, Cake, trading at $3.67, down 0.19%. Still have eyes on that decentralized exchange market now. We're seeing those tokens, giving up some gains. Cake was moving, quite bullish for a while now, but we're seeing profit taking, happening with that one. Even though we've had that debate about centralized and decentralized exchanges with the tokens, but the centralized exchanges looking pretty good. Talking about BNB still trading above $300. Let's see if we have Rume back again. Hello, Rume. Hello, Rume. All right, still can't get Rume. So yeah, so looking at the Chilis there, that's appearing on the losers counter. We know how those fan token platforms did perform last year. Did do well. Chilis did get a run there. But I think we have Rume now. Okay, no Rume. All right, so Leo still topping the counter, 1.31%. We're looking at the next trend right now because we know the AI trend that was in the first quarter that came, really heavy on the crypto market. Looking out for the next trend at this time as the market, continues to grow. So that's how the market is looking. Quite green, not looking bad, looking at more resistances to be broken in the crypto space. But that's it for the program today. Don't forget, join us 1:30 Business Incorporated for more updates and developments in the world of business. Thank you for watching. I'm Ladi Williams. Bye for now.